morning, America. Welcome to the Phoenix National Network. My name is Richard Ciuzio, and I am your residential loan officer licensed here in the states of New York, New Jersey, Connecticut, and Florida. And for those of you who are tuning in, I want to thank you for taking the time out and trying to get some education on my segment today of condos versus co-ops. I want to talk to you a little bit about what the subtle differences are between condos and co-ops and what the process is when buying your co-ops and what the qualifications are for purchasing these co-ops. Co-ops are a little bit more stringent than the condos, but I'm going to go over those in detail for you. For any free, if you haven't already done so, feel free to download the app for Phoenix National Network on your smart devices, whether it's iPhone or your Samsung Droid. You can also tune into us live on any of your Amazon or Roku devices and on Facebook and YouTube as well. So that being said, if anybody needs to get a hold of me for any reason, you can reach me at richard.cusio@hudsonunited.com, or you can call me on my cell phone at area code 321-634-2552. So I'm going to jump right into it and start off with condos versus co-ops and tell you what the difference is. I can't find the broadcast. Somebody's texting me. All right, so let me share my screen. Let's see. All right. Okay. Condos or co-ops, which one is right for you? All right. So I'm going to start this from the beginning and just go over the basics. Condos, what are the differences between the two? Well, for first off, condo is real property. All right. You own it. You can do whatever you want inside those walls. It is yours to do with. All right. Co-ops are like stock. You have an ownership interest in the corporation when it comes to a co-op. That's why you get a stock certificate and proprietary lease at closing. What is the stock? The stock is an interest in the building. The building is the stock. You own a percentage of ownership in that corporation. The corporation is the building is the stock. Those are the two differences. This is why co-ops have a lot more restrictions when it comes to qualifications than the condos do. How do I qualify for a condo or a co-op? Very simple. We can qualify you on a condo conventionally. We can also do condos because they are real property. They're also VA eligible. You can get VA loans on condos. FHA, however, you have to find eligibility. You have to find whether or not if the condo is approved for FHA. There is a link that's right here. It's a great website to look up. If you go to this link right here, entp.hud.gov, you can type in, you can search FHA approved condominiums by geographic location, county, city, state, etc. And it'll tell you if it's FHA approved or not. But because it's real property, we just follow the conventional guidelines when we're doing a loan for anybody purchasing a condo. There is no board approval with a condo. You just have to get approved by the bank. You go through the process, you get pre-approved as long as you qualify with your DTI, you're able to support the mortgage with your income and your other expenses, you can qualify. Co-ops, however, a little bit different. You have to qualify conventionally. Why? Because you cannot do any government loans on a co-op. That means you can't do any VA loans, you can't do any FHA loans, and you can't do any USDA loans. They will not finance government loans on a co-op. So it has to be a conventional product. You also have to pass board approval. We can approve you all day long with the bank, but then at the end of the day, you have to pass the board approval. You have to have a strong borrower profile and meet their criteria. What are some of their criteria? Let's go over that. Questions to ask ahead of time when you're doing a co-op. Anybody, if there's any realtors tuning in or buyers tuning in, These are some good questions to ask, whether it's the listing agent or the property manager for that building ahead of time. So you're not spinning your wheels and you're wasting time, and you come to find out that you get denied by the bank or whatever it may be for something as little as one of these restrictions. Co-ops, does it have to be owner occupied? If somebody's looking to do an investment property or rent it out, this is a good question to ask because most co-ops do have to be owner occupied. However, there are some co-ops out there that will allow rental. Can there be a co-signer? A lot of co-ops don't want a co-signer because they want to make sure that you are financially stable in order to support and live there, to support the mortgage and their HOA maintenance fee, if you plan on living there. However, I have seen some cases where they do allow co-signers, co-borrowers, whether it's a relative or something like that. They are out there. However, a lot of the times, these go hand in hand with income restrictions. You got to make a certain amount of money. If you don't make a certain amount of money, they're not going to let you live there. Is there a debt to income ratio restriction? I run across this all the time with co-ops. I have found some co-ops where there is no debt to income ratio restriction. However, they do look at you as a whole, a borrower profile as a whole. The lowest debt to income ratio I have seen is an 18 on the front end and a 22 or a 25 on the back end. That means your front end expenses divided by your monthly income on the front end, your front end housing expenses have to be less than 18%. And on the back end, which is all other installment and revolving debt, with your housing expenses have to be under 25. I've seen 28.35, I've seen 28.32, I've seen 18.22. So every co-op is different. They all have their own qualifications, but this is a very, very important question to ask, because if your borrower does not meet that DTI restriction, they either have to show more income or maybe put more money down. Try to get those numbers in line, maybe pay off some existing debt. But this is a very important question to find out ahead of time. Is there a debt to income ratio restriction? Is there a minimum down payment requirement? A lot of the times there are. 95% of the co-ops I've come across do have a minimum down payment, usually no less than 10%. However, most co-ops probably want a 20% down payment. So this is a good one to ask. On a $100,000 co-op, that's $20,000. So if you don't have that kind of money, this is something to, maybe you should think about going for a condo instead. And I'll go over the differences with that in just a little bit. Is there a minimum annual salary requirement? Every co-op is different. So this is another good question to ask. I have run across two in the past month trying to, for potential buyers, where one co-op wanted a $50,000 minimum annual salary. The other co-op wanted a $75,000 annual salary as a minimum in order to qualify for this home. That's just one of the qualifications on top of all these that I listed here. So, are you making enough money to meet this co-op? If not, maybe we should look at a different co-op. Is there a minimum FICO score requirement? What is your credit score? Do you have good credit? Most co-ops, not all, but most do want a credit score higher than 700 plus. The lowest I've seen a co-op, if they don't have a restriction on it, was 680. However, most co-ops that I've come across want you to have 700 or higher credit score. Now, remember, when you're doing a credit score, we run a tri-merge credit report that's from all three bureaus: TransUnion, Equifax, and Experian. And out of those three, we're going to use your middle score. So if you have 700 with one, 710 with the other, and 720 with the last bureau, then we're going to use 710 as your qualifying score. If it is a joint application between two borrowers, they use the lowest middle score between both borrowers. That is how we qualify. And that is what they're going to look at. So this is another very important question to ask. Are they going to let somebody in with 590? Probably not. Like I said, if they don't have any of these restrictions, they look at the borrower profile as a whole. Are you a strong applicant? Do you have good credit? Do you have good income? Do you have good assets? These are all questions to find out ahead of time and ask yourself before applying for a condo or a co-op, especially a co-op. Do you need reserves? What are reserves? Reserves are backup principal, interest, taxes, and insurance. It's your backup pity for a condo or a piece of property, single family residence, multifamily residence. On co-ops, your pity, usually they consider reserves your backup HOA and maintenance fee. So if they want 6 months of reserves, they want you to have at least after closing, after down payment and closing, at the end of the day, after everything is said and done in liquid assets, they want you to have at least 6 months, most of the time, backup HOA and maintenance fees. So if your HOA fee with the co-op is $1,000 a month, you need to have $6,000 extra in liquid assets at the end of closing, after closing, to satisfy this requirement. It does happen on condos too. However, if you have a strong borrower profile, it's not always needed. Are there any pending litigations? This is huge. Okay. We do not work with any lenders, to my knowledge, that will sign off and approve a condo or a co-op if there are any pending litigations that are structural. Structural is big because it's an insurance liability. There are mechanical litigations. There are financial litigations. There are also structural litigations. Finding out what if there is a financial, we can usually bypass. It depends. It's gonna be from scenario to scenario, and just getting the proper documentation, financials, budget, things of those nature from the management company. However, I have not come across a pending litigation which is structural that we have been able to get approved. So if there are any structural pending litigations, um, that is a big one to find out. They probably won't get approved. And it's also a bummer for the people that actually live there, because not only will new potential buyers not get approved by the bank, but people who want to refinance and are currently living there might not be able to do a refinance either because of the structural pending litigation. So these are some questions very important to ask ahead of time, so nobody's spinning their wheels and wasting your time. So who do I ask? Who do you ask these questions to? If the listing agent doesn't know, which they should know at least some of these questions, you can always reach out to the management company itself. The listing agent will have the management company's information, and you can just ask to speak, just give them the address and the unit number, ask to speak to the property manager, and they'll give you the answers that they need. You can either do it by phone or by email. I find that email is most responsive nowadays with a lot of these management companies, and for most people. So answers in comparison. Uh-oh. Okay. Oh, beautiful. So so the answer to that question, does it have to be owner occupied or can it be an investment home for a condo? It does not have to be owner occupied. You can have an investment condo, or you can use it as a vacation home. Co-signers, you can most certainly have a co-signer. Absolutely. If you need help with qualifying, you can definitely do it with a condo. It's a conventional product, and we can use an occupying or a non-occupying co-signer to help you qualify and under those debt to income ratios and qualify you for your loan. Debt to income ratio on a conventional product: 46 on the front end, 49.9% conventionally. This is a conventional product. These are the guidelines that we need to follow in order for you to qualify for a conventional loan. If it's FHA, you can go a little bit higher on the back end, 56. However, remember, with condos, FHA, you have to find an FHA approved condominium. For VA loans, you can go as high as a 56 or a 58 with some lenders on the back end as well. Plus, you get a lower interest rate, and there's no down payment. There are benefits to a VA loan. So just a heads up on that. And salary requirements for living at the complex. As long as you can support the mortgage and your finances and you qualify conventionally, there is no minimum salary requirement. However, with the co-ops, if you look on this side, most of the time it does have to be owner occupied. You need board approval if you're going to rent it out or using it as investment. You need board approval if you're going to sell it or refinance. Co-signers have to get board approval. DTI, here it is again. So DTI with most co-ops, 24, 35%. That's, I would say, probably pretty average. However, I have seen lower. Like I said, I'm doing one right now that the back end is like 22 or 25% is the maximum. So, it's got to be making very substantial income and very few expenses to get this DTI down. Salary restrictions, like I was saying earlier. I've seen some salary co-ops with salary requirements of a minimum of $50,000 annually and $75,000 annually. It varies from co-op to co-op. If they don't, then you have to go through the other list of requirements to see if you are a strong and potential candidate to get board approval. Down payments, once again, anywhere between 10 and 20% for co-ops, varies from co-op to co-op. So this is a good question to ask ahead of time, whether it's the listing agent or the management company itself, to find out what your requirements are. On a conventional loan for your condo, the reason the difference is with the condo versus the co-op on the down payment, you can put as little as 5% down on a conventional product. The reason being is because on all conventional products, the bank will only finance up to 95% of the appraised value of the home, which leaves 5% of down payment. However, if you qualify for a first-time homebuyer product or a home possible or home ready and fit those income restrictions, I'm working with a client now who does fit those guidelines, we can go as little as a 3% down on a condo, which will help you save money in the long run on your down payment. Whereas co-ops, they want you to have that 10 to 20%. So this is a big difference between the two. Down payment, little as 3 or 5% on a condo and 10 to 20% on a co-op. Sorry, I don't know why one side is working and the other side is not. So on a conventional product, your minimum FICO score can probably be as low as 640, and we can probably still get you an approval with a condo on a conventional loan. However, your co-ops, like I was saying earlier, want you to have 680 to 700 or higher. All right, this is huge. So for those of you who don't think your credit application or credit profile is that strong and might need to repair it, I would start doing this a few months in advance, trying to get that score up if you're thinking about buying a condo or a co-op. I'm sorry, a co-op. FHA and VA minimum FICOs anywhere between 600 and 620. You do have a little bit of leniency with the VA and the FHA products. However, it is on a borrower to borrower basis. They look at, we look at the borrower as a whole, the whole profile. All right, reserves. Remember, the reserves, the backup principal, interest, taxes, and insurance, they are not always needed on every borrower. Maybe investment properties, yes. However, for a conventional owner occupied primary residence on a condo, if you have a strong profile, it's not going to be needed. Co-ops might want you to have at least 6 or 12 months backup assets in the bank in reserve, which would be your HOA and maintenance fees. So if you've got, like I said, if you have $1,000 HOA maintenance fee or bill every month, you're going to need either 6 or 12,000 backup. Now, are all co-op maintenance fees $1,000? No. I've seen some that are $1,250. I've seen some that are $1,450. I've seen some that are $600. So it all depends on what co-op, where the location is. There are a lot of factors involved, but this does vary from co-op to co-op. But we just want you to be prepared financially and know what to expect down the road as far as purchasing a co-op versus purchasing a condo. One more time, neither condos or co-ops on this litigation that I have come across will lend on a pending structural litigation. There might be some lenders out there that will. However, we personally do not work with any that I know of that will lend on a structural pending litigation. This is a big one. It's an insurance liability and it's a safety concern. So the lenders just don't like taking those kinds of chances. Um, okay. And one last question to ask when purchasing a co-op. This is important too. I've only come across this a couple of times, but I actually had to do some research and figure out what it was. It's called a ground lease. Is there a ground lease with a co-op? Why is this important? I'll tell you why this is important. Be- After I explain what a ground lease is. What is a ground lease? It's also known as a leasehold or a land lease. It's an unusual arrangement in which a co-op or a condo owns its building but pays rent on the land. Okay. Um, the rental agreements are usually for long terms, and when the term expires, the co-op or the condo is in a tickler's position. Why? Because anybody buying a condo or a co-op and the lease is set to expire. Like I have a client now where the lease was set to expire in 2051. If she does a 30-year mortgage buying this co-op, which she does qualify for, um, she the loan would not go through because the land lease has to expire 10 years after the mortgage satisfaction. So in this case, for it to qualify, she would the land lease, which is set to expire in 2051, also the same year as her 30-year mortgage, would have to expire in 2061. You have to add 10 years. It has to be satisfied within that 10-year period. Otherwise, she'd have to qualify for a 20-year loan. So luckily, we got it. The co-op or the was able to extend the land lease to like 2151, like 100 years from now. So we'll all be gone by the time that land lease expires the next time around. However, that's pretty much the gist. The ground lease is set to expire no less than 10 years past the mortgage contract date. So if you have a 30-year mortgage, the ground lease has to expire 10 years or more past that mortgage contract date, satisfaction date. Another big, um, another big, I think this is it. Oh, sorry. Which sounds better to you, condos versus co-ops? Here's this quick breakdown of uh, each one. Condos are real property. You can renovate, you can refinance, you can do whatever you want inside those walls. If you want to renovate your kitchen, if you want to paint the walls, if you want to um, do whatever, put more floor tile down instead of wood or wood instead of tile, put down carpet. You can most certainly do that. You can do whatever you want inside those walls. You can qualify for a conventional, a VA, or FHA if the condo is eligible. You can have a co-borrower. You can use it as an investment property. It's faster close time because you're not waiting on stock certificates, proprietary leases. You're not waiting on board approval. You're just waiting on bank approval. So it'll probably be about a month faster on a turnaround time buying a condo versus a co-op. And then, like I said, there's no board approval with condos either. Co-ops, it's ownership in stock. You don't own the property. You own the percentage in the stock and corporation. If you want to renovate, you got to get board approval. Conventional product only. Investment property with board approval. Qualifying restrictions, DTI, down payment, FICO score, annual salary. Those are the questions you want to ask when somebody's interested in buying a co-op. Do I qualify under all this criteria? If so, great. If not, what do we got to do to make that happen? Lower purchase costs. Yes, condos or co-ops sometimes are cheaper than condos because just because of the way they're structured. Yeah, it's not the real property. You have lower purchase costs. However, you also have lower closing costs as well. On average, you're looking at about $5,000 or $6,000 in closing costs to get a co-op. Why? Because there's no taxes. You're not paying. Your taxes are included in your maintenance bill, so you're paying everything through your HOA maintenance fee. There's a lot of fees that are not involved with co-ops that there are with condos. And I'll show you that in just a moment. But on average, you're looking about $5,000 or $6,000 in total closing costs, plus your down payment, of course, for a co-op. And then last but not least, it is a little bit longer to close because, well, you got to get the board approval. Board approvals right now, I had a client, it took them a month and a half to get just a board meeting, and then they had to go through the approval process. So it's a process. It does take time. It is longer than buying a condo. And then y'all, last but not least, you do need that board approval to qualify. Here's my information. I want to thank you for watching. However, I'm not done just yet. I am done with this PowerPoint. I'm going to show you that just a quick breakdown of um, the differences between your financing here, the costs for a condo versus a co-op. I'm using the same criteria for each. For this one's a condo over here. This one's a co-op over here. Same FICO score, same purchase price. This should actually be 10%, sorry. Same down payment, same loan amount, same interest rate, same 30-year term. Principal and interest is exactly the same. Insurance might vary versus condo versus co-op. Your maintenance fees, I put those exactly the same. But then here over here, you've got taxes because it's real property. You have to pay taxes on your on your um, on your condo. Here you don't. You don't have taxes. It's built in to the maintenance fee. So the HOA maintenance in this scenario might be like, 500 bucks, and then you have an additional 250 in taxes, which equals a 750. However, you can see there's about a 200 and almost a $280 difference between the condo and the co-op's monthly payment. Now you've got services you can't shop for. You've got underwriting fees from the bank. You've got the appraisal, which should be the same, credit report. Now you've got tax service and flood certification. Um, you've got title searches. You've got recording. You've got New York State mortgage tax. So you've got some of these fees over here: owner's insurance for the title, lender's insurance for the title searches, bankruptcy searches, Patriot Act searches. These are all included. These are all included in this fee, plus survey. So these are all costs that are going to be divvied up into your total cost at the end of the day. You don't have that with your co-op. As you can see, your total closing costs are almost $6,000 difference, $5,500 difference, because you're not paying tax, you're not doing title searches. All we got to do is a lien search on the co-op. Got to make sure there's a UCC filing for your stock certificate and your proprietary lease. You're just paying attorney costs, underwriting costs, appraisal costs, credit report, and your UCC and co-op lien search. That's it. Look at this. 44,000. Then you got your insurance here. You do not escrow on co-ops because it's not real property. So you're going to be paying your insurance, your your HOA maintenance, and your insurance along with your principal and interest all separately, all outside the mortgage. If you put less than 20% down on a condo, you'll have to pay everything within your mortgage and set up an escrow account, which is estimated here. So what's the difference? You're looking at about a 10 on both scenarios, exactly the same. Condo versus co-op. There's almost a $10,000 difference between the closing costs. So that is everything in a nutshell. It is a lot cheaper to close on a condo, but it is a lot longer. I mean, a co-op, I'm sorry. It is a lot cheaper to close on a co-op than it is a condo, but you, oh, what happened? Oh, I guess that's it. So, listen, I want to thank you guys for tuning in. If you have any questions, you do know how to get a hold of me. If there's any questions to be asked, Phil will let me know. Otherwise, I want to thank you again, and I hope to see you guys soon or hear from somebody. If you have any questions, consultations are free. Thank you again.